of walking on the wild side. Do we need cyber insurance? And joining us for today's discussion, we have three amazing panelists. We are joined by the Managing Director and Co-founder of TrustVault. We have Buddhika Dialvis. We have the Regional Practice Leader for Cyber and Technology PI Asia at Allianz Global Corporate and Specialty. We have Unnati Bajpai. And last but not least, we have the CEO of George Stewart Insurance Brokers Private Limited. We have Joey Caspers. Good evening, everyone. Thank you so much for joining us here today for today's discussion. And of course, we cannot forget the amazing moderator of Opinion Unlocked. We have the director of Layer 7 Seguro Consultoria, the only Sujit Christie, joining us today, as always, to moderate today's discussion. So Sujit, before handing things over to you, I would also like to mention that this episode, this last episode of Opinion Unlocked is live on LinkedIn, Facebook, YouTube, and Twitter on the Articulate Asia account, as well as the IIT account as well. So for everyone joining in, you can join on any of these platforms, and you can direct your questions through any of these chats as well. Our panel is moderating this, and your questions will be answered. So without further ado, Sujit, I would like to hand things over to you to please continue this episode.
Asula, thank you so much for that warm introduction. I welcome all of you to this panel discussion. So the most talked about topic these days for me is cyber insurance. Every time somebody talks about ransomware, it is followed by cyber insurance. And somewhere I was actually reading an article, and they're comparing the ransomware profits to the Colombian cocaine cartels in the 1970s. It's as good as the cartels of those days. So that's how they're comparing the ransomware attacks or the cyber attacks to the cocaine business. So when I look at the cyber insurance or insurance per se, this industry is in transition. So you guys are experts, so you could actually correct me whether my assumption is correct. So there are things which we do in terms of underwriting strategies, and especially with respect to cyber risk. Now, I was speaking to a professor in insurance, and he was saying insurance business is all about quantifying the risk. So when you draw up a policy, you quantify. Now, the biggest question all of us, security professionals, industry professionals, insurance professionals, all of us have, at some point in time, we thought we could quantify it. But today, when we reflect, can we really do that? Especially with the evolving threats, rapidly expanding exposures, because of the digitization and because there is a transformation happening, right, due to COVID. So with all these things, we have this debate. Do we do cyber insurance or do we live without it? So the question I'm going to pose to Joey is, what does this cyber insurance mean? What is it after all, right? I mean, is it a technology? Is it a product? How does it work? Joey.
Thanks, Sujit. So cyber insurance actually evolved in the late 1990s as an outcome of the dot-com boom, okay? And as a result of the issues that were faced at that point in time, where these dot-com companies were going purely for turnover, they had various exposures which they sought insurance cover for. So the initial coverage was actually built around liability, that is, your responsibility towards third parties. But over a period of the last 20 years, it has now evolved into covering various other aspects as well. So just to give you an idea of the market, in 2020, the total market premiums were about 2.7 billion rupees, just a fraction of the $1 trillion drug industry, Sujit. 2.7 billion rupees was the premiums generated, which was a growth of around 22% over the previous year. However, claims or the loss ratio was at around 73%, 2020, mind you. And in 2021, that loss ratio has accelerated. So the insurance industry, I think it's fair to say that the cyber insurance segment of the insurance industry is actually struggling at the moment. As a result of this high increase in claims, insurance companies are beginning to drastically increase their premiums. But that's not all. And the increase in premiums is not by 10-15%, but they are looking at 50 to 100% increase in premiums. But that is not all. In addition to an increase in premiums, they're also beginning to restrict coverage. You spoke of ransomware. It's a huge area of concern to the insurance industry because of the lack of what they consider to be due care in this particular segment. So some markets, especially in the West, are beginning to also restrict coverage. Now, here in Sri Lanka, the issue is compounded because here we have a very small market. There are very few companies that actually arrange the cover, and no local insurance company has the capacity to arrange cyber insurance. They have to go overseas in order to get the cover. And what they have discovered recently is that the overseas reinsurance markets are not prepared to extend terms for Sri Lanka. Or if they're doing it at extremely high premiums and very, very restrictive terms. So that's kind of an overview of the insurance industry pertaining to cyber insurance and what the current market conditions are like, Sujit.
What actually caught my attention is the exorbitantly high premiums, and that the Sri Lanka is in the wherever we are, for whatever reasons, we are compelled to do or pay high premiums. Buddhika, I'm just going to pick from there and talk to you about this. Now, let's say we have large enterprises who actually are quoted. Then we also have smaller enterprises. Then on the other hand, we also have essential services. Now, earlier we talked about essential services in the context of maybe electricity, power, water. But with this COVID, we also start seeing several other businesses being categorized under essential services. For example, supermarkets or delivery services, pharmaceuticals. Now, in order for us to keep businesses running, right, let's assume there are two scenarios here. One scenario, in order for us to get the insurance policy, cyber insurance policy, are the companies, all the organizations in Sri Lanka fit? When I say fit, like this is like, you go for a health insurance, they expect you to prove your health status, right? Fitness certificate, right? Are the organizations fit enough to even get an insurance policy?
All right, so it's a very good question, Sujit. Now, if we look at the typical cybersecurity hygiene of our industry, particularly this market, the companies, right? So different companies tend to maintain a different hygiene, right? Some companies, if you have seen, they have gone for certain certifications, right? Some companies, they are claiming that they are compliant, but they have not gone for certifications. And I believe that only few companies have got the independent verifications that they have proper cyber hygiene, right? So this fitness question, when it comes, it's very difficult to answer. And our regulation, that certain industries are properly regulated, but certain industries, typically these essential services, are not well regulated. And the IT problems, the cybersecurity problems that they have is vary. We don't have a proper common framework that we have put forth, right? To say that, okay, this company is fit for a cyber insurance, or this company is not fit for a cyber insurance. Therefore, I believe that that's why the cyber insurance providers also sometimes they quote different premiums when it comes to the underwriting part. Now, if you look at the other markets, particularly in US, there is a cybersecurity rating. Even in UK, the European markets, they have these ratings, and that is their cybersecurity rating is sometimes published, and that they can go to the cyber insurance providers and basically demand the premium value that they have to provide. But of course, here it's a big problem. And the way the management, where the IT team also looking at this hygiene, sometimes the priority differs based on their knowledge, skill set, and the requirements that they think that this is the priority. But of course, that's not. Those are the problems. Those are the problem cloud that we have when it comes to answer whether the company is fit for a cyber insurance and whether we have at least a basic cyber hygiene in place. A big problem. I think that's where we have to intervene, and probably the government or the regulators need to provide a common framework. Particularly like in US, we have cybersecurity plus or the programs. In US, there is a rating system, right? Likewise, something to need to be put into place. Say that okay, independently verifying whether the company is fit enough for a cyber insurance. I hope that answers the question.
Yes, Budika, it did, but it actually has raised several more questions. I'm going to come back to you, right? I'm just going to come back to you in the context of the ratings, the additional investments which we need to do. We'll talk about it, right? I'm also going to come back and talk to you about legacy systems as well, right? Ricky, I'm just going to turn to you, right? I'm picking up from what Joey mentioned, right? I mean, the insurance premium prices are going up on one side, and on the other hand, we are also seeing there is a huge demand for insurance. And on the flip side, the insurers are also trying to reduce the premium, right? And then we are hearing from Buddhika, from a Sri Lankan context, the cyber hygiene of different organizations. While we may talk in different forums about cyber insurance, but we need to get the organizations to be, physically fit, so to say, right? I'm just going to ask you, since you're covering a larger market, you cover an APAC region, so you have exposure to different countries. What kind of threats or what kind of claims are you seeing in these markets, right? So this is for the benefit of our audience in Sri Lanka and maybe India and the SAARC region. They will benefit from whatever you're going to say. Over to you.
Sure, thanks, Sujit. So, I mean, it almost seems like we're the bad guys here because A, we're not offering the product, and B, if we're offering it at a very high cost. But I think, like you rightly said, on the other side, we're also facing losses. We're also seeing claims. We're seeing a lot of notifications. And one thing about cyber, which is slightly different from the other long tail products, is it's across the globe. So generally, you would assume the US, Europe, UK, etc. They're all more litigious markets, and that's why your other lines of business like D&O and crime and PI to some extent was more active in those regions. But for cyber, I think it's brought some sort of uniformity across the globe. We're getting claims from everywhere, and you're getting claims not just across geographies, but we're also getting claims across industries. So again, you would assume that typically things like banking or technology sectors would be probably more susceptible to a cyber claim, but we're also getting it from smaller manufacturing units. We've got claims from random places like a funeral home. So it's, you would think that's not possible, but the ground reality is that you're seeing a lot of notifications, losses from be it any size of the company, be it any industry, be it any geography. And again, it's followed a certain path. Like Joey was mentioning earlier, in the beginning, of course, people weren't aware. So even if they were having some sort of issues in their systems, I think they were just not aware that the policy could also respond to certain notifications. And that's why I think insurers had pretty much a less of a loss portfolio on their books. But now I think with the awareness and with the buying behavior that has increased, most of us, we're seeing a lot of ransomware cases like we spoke about earlier. And that's just increasing manifold because of your work from home nature, the way we're all dependent on technology, the amount of data that is now getting captured, and also how image conscious or the companies have become, right? Like if you have a little bit of a issue at your end, it could have several repercussions on your reputation. So I think with that, the exposure on extortion and ransom has definitely increased. I mean, we can talk about Bitcoin and cryptocurrency and it's and how they have influenced cybercrime, but I guess that's going to be another topic in another 1 hour long session. So I'm not going to go into that, but that's definitely boosting the crime scenario. And we see most of the transactions in cryptocurrency. So ransom is definitely a hot topic. And as insurers, we're trying to see how we can also protect our portfolio whilst offering cover to the client. Then there is business interruption. Seeing a lot coming from companies like pharmaceutical companies, which for the reasons of pandemic were under a lot of spotlight the past year. So we're seeing a lot of, again, claims, notifications, BI issues coming from them. And then, of course, you still have your third-party data issues, which come from generally companies which hold a lot of third-party personal information. And again, with that comes compliance, regulation, your GDPR regulations. Every country has now got its own acts and regulations that companies need to adhere to. So we're also seeing fines and penalties. We'll very soon know if that's going to be payable under the policy. So I think in the past 2 or 3 years, things have very quickly and rapidly evolved in cyber insurance. And as insurers, it's very difficult to keep up with those times.
Thank you, Natalie. So you're right. I mean, we have evolved so rapidly. And I mean, I was reading another report where Chris Rees from Cowbell Cyber, he's saying there's a 95% increase in demand during the third quarter of this year. Right? So that's a significant demand in terms of cyber policies. And what you just told me, I mean, we typically look at organizations, say large corporates, listed government entities, and then maybe, medium-sized businesses. Now, who on earth would think a funeral house would get encrypted or ransom or be targeted? So what I'm trying to illustrate here is the attackers do not distinguish who they are. Everything is looked at from a profitability perspective. If they can get a penny or a dollar from anyone, they will go after them. Buddhiga, I'm just going to come back to from where we left. Right? Premium costs are going to go up. There are a few organizations which are discussing cyber insurance. There are a few organizations have taken certain covers. But with the Data Privacy Act, now the Parliament has given the nod to go ahead, right? The Parliament has approved the bill. So that means we're going to see the act very soon. So all these days, we were only talking from a cyber attack per se, right? Or maybe like how Nati mentioned, like business interruption. But we're going to now start seeing, cases coming out of data leakage, right? About PII data. Now, you and I, as professionals in the industry who have been advocating cybersecurity, every time we go and tell the management that these things are to be done, or even we wear the auditor's hat and we say these are recommended controls to be implemented, eventually it boils down to dollars and cents. They're going to say, okay, we will do all these things, but then the business is going to come back and say, okay, if we were to do this, our cost of operation is going to go by X or Y percentage. Return on investment is something they keep talking about. How do we solve this issue with it?
Right. Okay. So, Sujit, it's a problem always like what is the value that we can give for a breach, right? It's a question that every person in the management or the board member will always have to ask. Now, we can't put a value to an incident. We can't put a value to a cyber attack. That's the biggest question that we all face. Now, in our market, a reason this thing, Sujit. Now, my experience. So my car recently had an accident. Okay. Now the insurance I got the claim, which cut down by 50% because I have not put it to the market value. and the market prices of the cars have spiked up within the last 3-4 months. So all these questions, all these dynamics are there when it comes to a coverage, right? Similarly, in our cyberspace, in our companies, the question always boils down to what is the amount that we can put to a data breach, right? What is the, and typically most of our companies, we are not used to do a quantitative risk assessment. Our risk assessments are qualitative. So what we always do is, okay, we do a risk assessment. If it's in an acceptable range, that's fine. But this acceptable range sometimes are not numbers. It's not attached to a financial impact, right? With that, it's very difficult for also to go to a cyber insurance provider and ask, okay, this is the premium, this is the cover we want. This is the cover we want. Now, the approach that we should always take is we need to look at the numbers. We need to look at our financial impact. If we have to give a penalty to someone or if a data breach happens, what is the penalty that we are going to give to a particular person, or what is the compensation that we have to give with this? Then that's how we have to work backwards. Now, what is our controls that we have put, and what is the amount that we are going to transfer to the cyber insurance provider? That's the question. That's how we have to look at this. And the next thing is, Sujit, I think with the data breaches now, so far Sri Lanka now with the data privacy comes into play. This is where now we'll have to see how the wheel is going to turn, right? The very first data breach and the penalties that the government going to charge will be the benchmark for the companies to look at cyber insurance, the cover that they will have to look at. Because so far, even with the now there were certain GDPR claims that the data privacy officer has even given as a penalty for certain companies who have breached the requirements. This has been the benchmark for certain companies to look at when they want to take a cover, right? So it's a learning curve still. We are in a learning curve. With the data privacy bill comes into play, we need to see how the company is going to react, how the government will react for a data breach, and what kind of penalties that they are going to enforce on these companies. With that only, that will definitely, my thinking, that will definitely set the benchmark to the entire market.
You're talking about benchmarks, and I'm just going to link whatever you said and going back to Joey. Joey, early in the discussion, you said we have a challenge in terms of getting policies, right? So is it because of the geography we are in, or is it something else which is compelling, the insurers to take a different view at Sri Lanka? While on the other hand, we are also promoting our country as a destination for various businesses, primarily tourism. And I think going forward, we'll be even encouraging people to come here on medical tourism, right? I'm just assuming. The next thing, we are also developing into a huge, shipping hub or, logistics hub. We have been, but we're going to grow bigger with the container terminals being developed and the airports being developed. Right? And on the other hand, the government is also now talking about digital currencies. Right? And I recall the Indian finance minister's speech yesterday in the parliament. She said the primary concern for the Indian government is to ensure the monies don't fall in the wrong hands. Right? So we have an array of businesses. Some are specific to an industry. Some large ones are diversified. Could you share some insights in terms of what are the challenges and how are we going to overcome this? Like if somebody were to listen to our conversation, if they are listening in right now, or if they were to listen to the recording, what would you tell them? Okay, these are 1, 2, 3 things that they could actually start looking at, so that that it will help as a country for us to talk to the underwriters and get the policy rates reduced. Joey, it's a long question, I know, but take your time to explain.
That's a great question, actually. So I completely agree with you that the insurance industry, in fact, I was having a chat with Unati on the same topic before we went live, that the insurance industry has to be supporting our local economy. So I'm talking here about Sri Lanka in terms of these emerging risks. Without the support of the insurance industry, some of our plans here in Sri Lanka would be next to impossible for the country to achieve. Now, the problem with cyber risk insurance is the global market that I just kind of sketched out for you. So the global conditions that exist and have tightened terms for the global players in respect of cyber insurance is magnified when it comes to Sri Lanka because our market is so small. Just bear in mind that the coverage that is being provided is quite wide. Okay, so whilst the core coverage is for third-party liability, that is your responsibility to third parties in respect of the things that you do. So that you collect data, you develop software, and if there are issues with any of that stuff, then you are held responsible. That has been compounded here in Sri Lanka because we now got this Data Protection Act, which is winding its way through Parliament. Okay. Then it also covers business interruption. As a result of an ingress into your systems, your business is unable to kind of operate. That loss in what is called gross profit is also, it's possible to cover it. Then you have things like crisis management. And finally, you have what is called first-party losses, which include hacker theft cover, plus ransomware as well. So the cover as it kind of currently exists is quite wide. Now, for us here in Sri Lanka, the problem is that none of the local companies have the capacity to underwrite it. They have to go overseas. Now, to an underwriter sitting in the UK, in his office in the UK, he has to try and assess that risk. So what does he do? He will send Buddhika a 20-page questionnaire, right? And he will ask Buddhika to complete this. It's a very detailed thing to try and extract the risk that the company is exposed to in respect of cyber risks. Based on that, they will decide as to whether they are prepared to underwrite the risk or not. Then they will send you a follow-up question. Now, the insurance industry, in addition to the standard questionnaire, without exaggeration, it's about 16, 17 pages long. They've also developed a supplementary questionnaire now for ransomware, which is equally long. So there's a lot of detail that they try to extract. But despite all of that, what we have discovered is that the appetite to accept risk from Sri Lanka is extremely low. Actually, Unati, a couple of weeks ago in desperation, I wrote to some of the big reinsurance companies, the Munich Re's and the Swiss Re's, and kind of told them this issue that we are having in Sri Lanka and as to whether there's anything that they can do about it. But both came back saying that their appetite for businesses out of Sri Lanka is extremely limited because of lack of transparency in respect of risks and so on. And that they are unable to help at the moment. So that's an issue for a company like yours to try and take on board as well. I would also say, Sujit, just add to what I'm just saying, given the fact that buying insurance for cyber risk is so difficult, whilst it's a useful process to go through a quotation, because those questionnaires give you some benchmark and a guideline as to what you should be doing in order to improve your own internal systems and processes. It's extremely useful because it's so minute in terms of the details that it picks up. That's one. Second thing is that I think companies should be spending on three things. One is you must spend on cybersecurity training. Okay. Secondly, two simple things. Multi-factor authentication is something that IT specialists must look into, right? And thirdly, you should, because of this work from home environment, they should be looking at lockdown remote desktop ports. So two smaller issues in terms of trying to control the risk rather than buying insurance. If insurance is too expensive to buy or it's not possible to afford. But perhaps Unati could also add to what I have just said.
No, I agree. I think every time I go after Joey, I become the bad guy in the conversation. So so I will I'll take that on the industry's behalf. But no, I agree with you because we've also recently started working on Sri Lankan risks, and we're seeing some submissions come in. It's difficult. It's a market that's just about, I think, realizing the need for cyber insurance, and as is, I think, typical with any growing market, they will also have to test waters. The limits are small, so I think the challenge when you go to a reinsurer becomes, smaller limits are not something that we would get very readily interested in. Our pricing would probably be higher than the limit. The deductible would be higher than the limit of liability that the client might want, and that, of course, will, I'm sure, pose a challenge to the brokers and the buyers of insurance. But I think first of all, there definitely has to be transparency in the risk quality, and that will comes with, I think, dialogues with the clients, having discussions directly with the insured if possible. And like you said, we can only fill in those 20 pages, but at the end of the day, what's really happening with the company, only the client can sort of elaborate and explain things to us. There has to be transparency in declaring your losses, even if you are not being insured at that particular time. I think it's only prudent and fair to tell the insurance companies, your brokers, your agents about any incidents or circumstances that you've had in the past. And I'm pretty sure most of the clients have had. They've definitely had niggles here and there, not resulting into financial losses, but definitely certain scenarios might have arisen in their systems. And I think regular conversation to drive the market forward. There has to be more buying behavior, because insurance is all about, the more you sell, the more it's easier for insurers also to get interested in trying to participate in a portfolio. I think on a per risk basis, if there is a FAC approach, that's going to be very difficult for Sri Lankan cedents. There has to be a conversation around treaties. There has to be conversation around some sort of automatic facilities. That's the only way I think they can also develop and ensure that the market grows.
Sujit, I just want to add a few things here. I think certain sectors that you mentioned, one of the most important sector in Sri Lanka is the IT exports that we do, right? Recently, a few of my clients have been asked by their clients in Europe and US, particularly them to have a cyber insurance cover. So that was an entry requirement for them to get the business. So that the requirements are now coming in, and Unani, we have a good IT export market. Joy also know, right? And these companies are now struggling to find the insurance service provider and where to go, what to do, because the business is really important. And sometimes the unique things I have seen that certain clients that they post, this is the cover that you should have, and this is the cover amount that you should have. Certain amounts, the coverage, everything has been dictated. So they don't have that independence to select, okay, this cover I can take out, this cover I want, likewise. So it's a very important.
It's a very interesting point, because even in the Indian market, the IT sector is very well known, right? I don't really have to elaborate on it. And that's how the liability buying behavior also developed in the Indian market, because there's a lot of outsourcing, there's a lot of projects that are being done, especially for the US clients, and they mandate, or there's a mandatory requirement as a part of the contract that you have to have a certain amount of insurance that you need to purchase. And like you said, they are very, very particular about the kind of policies that you buy. You need to have a PI policy up to a particular limit. And now, along with PI, you definitely need to have a cyber component attached to it. So that's how I think the buying behavior also developed in India. And I think it's very similar to what you are saying in Sri Lanka also, that it's the contracts that are probably going to mandate buying of cyber insurance.
And the other part is what I have seen, it's not only this is on top of the accreditations and independent verifications that these clients, these companies have. It may be 27K certification or SOC 1, SOC 2, all those reports. On top of that, they are requesting for a cyber insurance cover.
I'm just going to circle back to that word transparency, right? Now, Joy, you mentioned about transparency, right? Could you just elaborate what exactly are the insurers looking at when they say transparency?
Yeah, so Sujit, basically the insurance company, again, remember that you're dealing with a guy who is, I'm just exaggerating, but sitting in an air-conditioned office somewhere in London, and he has no idea as to what he's dealing with. To the ABC company here in Sri Lanka is what they're like, what their track record is, and so on. So, in order to understand the risk, he's come up with this 20-page kind of questionnaire. Now, what we have discovered is, with due respect to the IT team here, is that the IT guys and ladies are a little reluctant to divulge information. Firstly, it's time consuming, right? So it's a huge challenge to persuade them that, the management requires this type of quotation. Try and help us out by giving us as much information as possible, particularly pertaining to their security protocols. Now, obviously, there is also reluctance on their part to divulge the information for reasons of confidentiality. But when you do that, it's a kind of a chicken and egg situation. When you do that, then the underwriter, when he looks at the replies on these forms, feel that they are trying to withhold information. That's kind of the impression that is created, and then it makes their job extremely difficult. So, to a degree, we need to provide as much information as we possibly can so that it makes their life a little bit easier in trying to assess the degree of risk. Bear in mind that claims worldwide have increased tremendously, both in terms of frequency and also in terms of impact. Right, so they're bleeding. I gave you the statistics. They have a loss ratio of 73%, and that's for 2020. And in 2021, that loss ratio has apparently shot up. So given that for every $100 they are paying off $73, right? Their margins are extremely small. So we have to, if we are going to succeed in leveraging solutions, Buddhika has mentioned that it's now made a part of his contractual obligations with clients, right? If we are going to comply with that, then we have to be able to provide this information. Buddhika, just to make a point also, it is possible to push back a little bit on these contractual obligations, right? If you do explain, for instance, I'm not sure what type of limits that you're talking, but some of these contracts that come in apply limits that are applicable to Western markets. So they might tell you that they want 5 million euros of cover, okay, $10 million of coverage and so on. So you need to push back and explain to them the market in which you're operating, the type of exposure that you are facing, and also the legal environment in which you operate, right? And tell them that whilst the coverage may be necessary, this type of coverage, in a Sri Lankan context is unnecessary. It works, Buddhika. They are generally flexible on some of this stuff.
Only thing, Joy, when it comes to the data that the service provider is going to take, that's the issue.
Yeah.
So
data, you have a problem because of the GDPR that's applicable in Europe, plus in America. Each state has their own set of laws in terms of data protection. So there, you need to be able to give. But again, if you give them some comfort that you have these particular security protocols in place, again, use the questionnaire from the insurance company as a guideline, Buddhika. But if you give them comfort that these are the protocols that you have in place, right, then they may back off. We have come across some cases where they have taken a more flexible view on some of these limits and so on. They still insist that you have some sort of coverage in place, right? But they back off with regard to the limits of coverage and so on that are kind of required. But certainly where data protection is concerned, they're very careful because it applies to your operation here in Sri Lanka.
Exactly. That's a problem.
Yeah.
And most of the case, Joy, Sujit also know the complexity of the infrastructure. Now, we typically, most of these companies are cloud, right? So the jurisdictions, complexities and all that, sometimes what I feel is that's a supporting confidence that the customer is also looking at.
Yes.
Because if the data is here, the comfort zone that they are in is in a different, if the data is hosted in a cloud in Singapore or where it's more controlled environment, where the jurisdictions allow them to put a case or go to courts based on the laws if there is a breach. So that is also something that the clients are also looking at.
Yeah, jurisdiction, your insurance policies can cover a wide jurisdiction. So, of course, it comes at a price, Buddhika. But you can cover global or worldwide cover, including USA and Canada. The trick is to try and bring down the expectation with regard to the limits that they're inserting on these contracts. In addition to the safety protocols and so on that I mentioned, you must also point out that any contract will have an indemnity provision, right? So regardless of your having your insurance policy or not, they have a legal right to come after you if you have, had an error, omission, or negligence in terms of performing your contract. So using those tools, you can sometimes persuade your partners overseas to be a little flexible on these issues, but you need an expert on your side helping you to do that type of thing. So, try and use the services of an insurance broker or your insurance service provider in handling some of this stuff.
So interesting observations, right? So typically we see supplier security, but I am seeing it now enforced and people are demanding a cover, not just a report to say that your processes are secure by just, complying to 27001 standards or SOC 1, SOC 2, whatever compliance requirements. Maybe I'm just going to revert back to you, right? I mean, when I look at an insurance policy, and sometimes I guess we are all getting older and I need a magnifying glass to read the terms and conditions. And I'm sure a lot of people out there would agree with me. And I guess all of us, Buddhika is not wearing spectacles, but I'm sure he's closer to there to wear specs as well, right? So while there are conditions, and I'm sure there are exclusions as well. So especially from the perspective of cyber insurance, what kind of exclusions are included, which we need to be aware as people who subscribe to a policy? Could you just tell us something about it?
Sure. So, like you said, and I would like to add this disclaimer to every buyer of insurance: please read your policy document very, very carefully. Ask all your questions before buying it and before getting into a contract, and not after a claim. I think, and that comes, true for cyber also, especially since every insurer has a different wording. The terminologies are very different. Someone might call it business interruption, someone might mention it as network interruption, and so on and so forth. So it's, I guess, very important to have also a good insurance advisor by your side when you're looking at buying your cyber insurance policies. It's generally the standard template is pretty common across insurers. You've got your coverage, which is divided into first party and third party. Your first party will include things like business interruption, extortion, which is your ransomware, your crisis management expenses, which Joey spoke about earlier. And your third party would be, any data loss or any privacy breach that you're having, which possibly is impacting third party information and data. And again, like with every financial lines policy, it comes with its exclusions. Typical exclusions would be things like bodily injury and property damage, which is generally a standard exclusion in most cyber policies. Of course, all these policies can be customized, but this is a pure financial loss policy. So bodily injury, property damage is not something that can get covered. It's a topic which is up for debate. It's a topic which is getting hugely discussed because obviously you have cyber incidents leading to huge property damage, huge bodily injuries, and where does that lie? Whether it's your property policy that's picking it up, whether it's your commercial general liability policy that picks it up, since cyber clearly excludes it. I think the other ones to be careful about would be things like infrastructure exclusion. Your electricity going down, as we might have a case with few of our experts sitting here on the panel. So whether that leads to interruption, where is the cyber, whether that was under your control, whether that was outside your control. So things like that, again, can be modified. So depending on your requirement, you can definitely ask the insurer to see what can be done. But generally, that's a typical exclusion. There is a war exclusion under the policy. Again, gray area, we were all discussing it previous to us coming live. How do you treat war when there is cyber terrorism, when there is a state-sponsored attack? Who declares it? I mean, do we all get a tweet from someone saying this is now categorized as a cyber war, and the insurer would be like, okay, now I'm going to step back because it's not covered under my policy. I don't think you get that kind of a clarity. But definitely, I mean, we have to exclude war. It's an uninsurable topic at the moment. And of course, anything uninsurable. So that's known circumstances, intentional fraud, uninsured fines and penalties. That's, I mean, basically something which is uninsurable. So like I said, fines and penalties, now you're having legislation which in a couple of countries, crypto payment is not going to be allowed. So if there's a ransomware demand in Bitcoins or any other cryptocurrency, I guess the policies will have to exclude all of those things. So yeah, I mean, very quickly, those are the generic exclusions under the policy.
So I guess you made some very significant observations in terms of exclusions. Two things which I pick up is one is in terms of the cyber war. Who actually says, who attributes it and says, okay, here is a cyber war? Mm-hmm. That's a question. I don't think we have an answer for that. Second one, in terms of cryptocurrencies, or if that crypto exchange or the infrastructure is ransomed, then that's going to be excluded. So where does that leave that? Where does it leave us in terms of? Yeah,
not just the crypto exchange, sorry, also transaction in
transactions, yeah, the whole framework.
Exactly, like China has just come up with their own legislation. Yes. I think in India, we're having a big debate around what can be done around
China also has said no to certain things, right? So, exactly. So I guess they consciously made that decision. Exactly. So I guess that's something which we as a nation, as professionals, we also need to take cognizance of what's happening in the other countries and take note of it, right? So before I switch back to Natya, I'm going to come back and ask you another question, but we have a question from the one of the participants, right? This question, Joey, I would like you to take it, right? So the question goes as, what is your opinion of creating a primary layer with national insurance trust funds? You're saying from RI point of view, as well as from the insurance industry point of view. Would you be able to?
Yeah, I think that's an excellent question, and also an excellent suggestion from the person who has posed that question. Unfortunately, at the moment, just for the benefit of the others, the National Insurance Trust Fund is a reinsurance organization, government-owned, and they handle things like the riot coverage and the terrorism coverage in Sri Lanka. Plus, they also take on 30% of all outward reinsurance has to be placed with this body. But there are some exceptions. So cyber insurance at the moment need not go into the National Insurance Trust Fund, and it's possible to place all of it separately for the simple reason it's a very technical, very complex cover, and they don't have the expertise to underwrite and absorb the risk. Okay. But I am a strong proposer that the National Insurance Trust Fund should be strengthened in order to overcome the type of issues that the market is currently facing. So I would certainly be supportive of a suggestion to strengthen their underwriting capabilities in order to take on a primary layer of some kind. This would certainly help people like Buddhika leverage from the market more competitive terms, because if the reinsurers overseas know that a particular layer has been absorbed here in Sri Lanka, then, so let's say you have a coverage for $1 million, National Insurance Trust Fund says, okay, we'll take the first $250,000. Right? Then the reinsurers have to only take up above that $750,000. Such a thing can be arranged, then placement of that $750,000 becomes far easier than at present. So I think that's an excellent suggestion, and it's something that the industry should certainly explore. And I, for one, will try and take up this suggestion with the regulator here in Sri Lanka. So thanks for that, Kaushini.
Excellent, excellent. So there is hope, right?
There is hope, yes.
There is hope, right? So when you said that we have limitations, now with your response now, with you taking on this and taking it to the regulator. And I think not only for Buddhika, but I think there are so many organizations out there probably grappling with this problem, right? So let's hope that there will be some relief in this area. Buddhika, very quickly, right? I'm just going to ask you. We don't have statistics in terms of the cyber crimes or cyber attacks which have happened in Sri Lanka. If we talk to Sri Lanka CERT, they probably would tell us that that people have been personally attacked. Like it's more of a social media related issues what gets reported to them. And I guess a lot of cases are reported to the CID, the cybercrime wing. But we don't have insights or transparency in terms of what really has happened. And I'm not sure whether the organizations have the confidence. When they don't have the confidence to transparently share information with an insurer, whether they would even share information about an attack. So that's a question. I want a direct answer from you. Can I assume that there are no cyber attacks, no ransomware attacks in Sri Lanka?
That's a tough question.
I got a call in the morning with a ransomware attack, Sujit. So we can't assume that there are no attacks because even that it's not published, but there are attacks. Right?
There are attacks.
There are attacks.
Okay.
The thing is, how are we going to expose these attacks? At least do a communication method like in GDPR, the notification of breaches. I think with the data protection bill, it will soon come. And I think US is having a good scoring mechanism. Like I told you earlier, they call it cyber reputation and security score, right? This score, it's like a crib for all these insurance service providers. Anyone can have a look, right? Whoever the authorized people to have a look, right? To see how well the company is doing. And they have, the biggest problem the companies have, if they go publish, okay, or go public with whatever the incidents that they have, they will lose the market, right? But of course, if the regulators can direct, okay, you don't have to go public, but report to us because we want that, and give the relevant authorized firms to go through these scope when evaluating certain things, particularly this cyber insurance risk and all that. That will be very helpful. That's something I'm thinking that should come.
Okay, so
that will come and that should come.
Yeah, on the same note, Buddhika, I think the Central Bank of Sri Lanka has directed all banks should report an incident within a specified time. This is only for the financial institutions, right? And I think the US also recently did an exercise, a cyber drill with all the financial institutions, and they've also demanded that within 72 hours that the organizations detect and report this incident. Right? I'm going to shift this question to Nati before I go back to Buddhika and Joey and get their response. Now, we saw a few major ransomware attacks happening in the US. Did we lose Nati? Okay.
I think she's gone off.
All right, she probably dropped off. Okay, let's hope.
Not dropped off, maybe.
Yeah. Okay, so I mean, I'll continue with the question. When she comes, we can probably look at it. So you must have read in the news that there were several ransomware attacks in the US, and some of them are. She's back. Okay, great to have you back again. We lost you for a moment.
Sorry. Yes.
No worries.
Things that can go wrong.
Absolutely. That's understood.
Sorry, I just lost you when you were just about to ask me the question.
Okay, I didn't complete the question, so you're good. Right, so the question is, we saw a lot of ransomware attacks in the US. And the big one to name was the Colonial Pipeline attack. Yeah. Right? And at that point in time, the US government turned around and said, this is cyber war. Mm-hmm. Right, so they categorized that ransomware attacks as cyber war, and they said, don't pay the ransom.
Yeah.
Now, let me also tell you the other side of the story. Now, today, the attackers, the adversaries, they don't use a scattergun to, go and, attack everyone. They're very, very focused. When I say very focused, they read your balance sheets. They go through all your media releases. They understand your business plans. They know exactly who the executives are in the organization. And most importantly, they also know exactly what is the cyber insurance cover you have. Right? In some cases, and I've read in the news that there are some cases where the attackers have called and told, this is the cover you have. You got to pay this amount, nothing less, not even 10% discount. Don't even bargain. You try to do something over and above this, we will ensure your systems will be completely disabled. Now, we have a situation, right? We are saying, okay, we will do cyber insurance, we will cover for ransomware attack. Here we have one of the developed countries telling the world, we consider a ransomware attack as a cyber war.
Yep.
Where does this leave us?
No, it's a very interesting point actually, and it's something that's been hugely debated again within cyber underwriters, and it's, I think, a board level topic with the insurance companies, because do you accept extortion and ransomware payment under the cyber policies, because you are in some sense encouraging such kind of events. Like you said, the minute they get to know that there is a policy, the minute they understand that you have, say, 5 million, 10 million, 20 million cover, it's assumed payment, and more often than not, the insurance company may have to pay, because there are apart from maybe sanctions as an issue, there are less grounds for you to deny coverage for such an event. And are you in some way sort of giving them encouragement for such kind of activities? Are you encouraging the trade? Are you encouraging cyber crimes? And we've all been internally discussing whether this is, as a coverage, should just be taken off completely, whether it makes sense to just take it off. At the moment, the insurers are living with it. We are sublimiting, we are underwriting it differently. I think, like Joey mentioned earlier, there are different questionnaires that everybody is getting, asking the clients to fill. But like, questionnaires can only lead you to a certain extent. When something has to go wrong, it will go wrong. In things like Colonial Pipeline, I think, of course, the US government got involved, FBI got involved. We managed to recover most of the payment, or I think the entire payment that was done got recovered. So that's a very different conversation, which they would have also had with the insurers. There must have been some sort of payout on forensics and investigation and things like that, but I don't think ransom would have been insurable under the policy. The minute there is some sort of state activity, I think that's where the gray area comes in, and that's where insurers might want to take a step back and assess the situation before readily agreeing to pay it or to cover it under the policy. And it also leads to a bigger issue of sanctions, like I mentioned earlier, because you're not supposed to cover anything sanctions related, right? And whether your attackers or your extortionists or your hackers are coming from a sanctioned country, how do you assess that? You would never get to know it at some particular point. It's very, very tricky and very challenging when the losses come in and for you to decide the insurability of it.
Right. So a lot of questions, right? So a lot of questions for which we need to find answers. So we are just about 2 minutes to wrap up the session. So I just want to very quickly hear from all of you, right? We'll start with Buddhika. What is that one thing you want to tell the audience here that they should do, right? There's something to take away for them and start implementing in their organization. And we'll just go to Joey and then to Nati, and then I'll wrap up the session.
All right. So, Sujit, the key takeaway that I would like to tell is not all risks that we can control. And sometimes we can't accept all risks. There should be an option to the management to look at the unknown unknowns. That's where the cyber insurance kicks in. And it's a matter of, that's one part. That's the option that we can take. The second is, just having the cyber insurance is also not enough. Just because you have insurance, full insurance cover to your car, you don't go and knock everyone, right? So the controls also matters. The fundamentals has to be there. Absolutely. With that, it's a definite option that we can take.
Joey?
Okay, a couple of things. Number one is, as I mentioned earlier, contact your service provider, go through the process of evaluating your risk along with your insurance service provider because it's a useful tool. Number two, insurance is very complicated. Use the services of an insurance broker. It is genuinely free of charge. Thirdly, my 3 points that I made somewhere during the middle of this discussion, spend on cybersecurity training. Okay? Use multi-factor authentication. And finally, lock down remote desktop booths.
Absolutely. Thank you. Unnati?
I won't take much time, but I think just to specifically talk about Sri Lanka as a market, I think there's a lot of scope. And like the panelists said, and a couple of questions that we have, I think there's a lot of interest also. It's a good thing to have conversations. It's good to work with insurers and advisors and brokers. Clients must look at cybersecurity as a board level conversation. It's something to be taken very lightly. Whether you opt for an insurance or not, whether you decide to take the hit on your own balance sheet, that's up to them, entirely up to them. But it's definitely a conversation that needs to be had. It's definitely an introspection that needs to be done because otherwise you are very, very susceptible to huge losses.
Yeah, right. So this has been a great conversation, right? So for me, we need to have this discussion, right? It's not something where you can ignore or not take into consideration. So this conversation has to happen. And as Joey mentioned, we need to do the basics, right? So simple things. And I also agree with Buddhika, right? I mean, we have to have that fundamentals in place. And overall, it is a good practice or a good thing to do is to do a self-assessment, work with the insurer, understand where you stand in terms of your risk, cyber risk. Certain things can be a process improvement. Certain things can be done through a training. But where technology has to come in, or if you need to relook at your technology investments, that can be planned for. But look at those compensating controls so that you can minimize that risk. So with that note, I would like to thank all three of you for being here, for sharing your experience, your knowledge. Your time is much appreciated. In the meantime, I would also like to thank our sponsors, IIT, for making this a successful program, and also Articulate for powering this platform. And with that note, me, Sujit Christie, signing off for this season, and we look forward to seeing you in another season in 2022. So I take this opportunity to thank all of you. A very happy Christmas and a successful and a safe New Year. Take care. Bye-bye.
Bye-bye.
Thank you so much. Bye.
You're welcome.
Thank you. Bye.